Well, hello, good morning, good evening, good afternoon, wherever you may be in the world. Hello and welcome to the latest Horizons discussion from Wood Mackenzie, sharing our views on the biggest issues in energy and natural resources. I'm Ed Crooks, I'm Wood Mackenzie's Vice Chair for the Americas and host of the Energy Gang podcast. And today we're going to be talking about our new report, Hydrocarbon Copy, the Upstream Industry's Return to International Shale Exploration. It's the result of some research we've been working on for a while, but of course, it is particularly relevant at the moment following the disruption to energy supplies caused by the conflict in the Middle East. To discuss the subject, I'm joined by the report's authors. Josh Dixon is a senior research analyst for Upstream. Hi, Josh.
Hello.
And Robert Clarke is a vice president for Upstream Research. Hello, Rob. Thanks for joining us.
Ed, good to see you, Josh, and everyone on the call.
Absolutely. So now, look, in this session, we're not going to go through the report in detail. I would urge you to read it for yourself. You can read it at woodmac.com/horizons. But what we're going to do, we're going to have a conversation around the subject and related questions from the inside. And of course, we're going to answer as many questions as we can from you, the audience. Before we get started, a couple of quick housekeeping items. Your mics are all muted. You're not going to be able to ask a question that way. What you can do is you can send in questions at any time using the Q&A panel on the screen. Be reassured the questions are confidential, so other people can't see the questions that you're asking. They don't know what you're going to be interested in. Only we can see that. And as I say, we'll try to answer as many questions as we can through the webinar. If you're a Wood Mackenzie client and we don't get to answer your question during the session, we will follow up with you later. Also note, please, in terms of usage of this material, this content is for the purposes of the webinar only. It's not for use in any other publications. So that out of the way, let's get on with the discussion. And Josh, perhaps you could start us off. Maybe just give us the kind of the key headlines, the elevator pitch for this report. What's it about?
Sure. So what's it about? Well, this report is a distillation of the conversations that Rob and I have been having with each other, as well as many of our clients over the last few months. And first of all, it's mostly about the breadth and scale of unconventional exploration around the world right now. And we also touch on why this time is different, because this kind of activity has happened before. But in the past, in the early 2010s, it's mostly unsuccessful. We think this time is already showing more signs of progress. And then finally, we talk a lot about the specific countries which we think have the greatest potential to be successful in the near term. So we'll talk about some of those in more detail throughout this.
Right, yeah. And that title then, Hydrocarbon Copy, I'd like the wordplay. What does it mean? In what sense is it a copy? What are you saying here?
And Rob, do you want to take that one?
Yeah, it's fun. There's a couple of reasons, right? So Josh mentioned Global Shale exploration a decade ago. We called that Global Shale 1.0 in the report. We're calling this Global Shale 2.0. But back to 1.0, the copy, Ed, was simply, can the success of commercializing source rocks that happened in the US and Canada, can that be replicated elsewhere, right? So that's copy. The 2.0 language is, it's a bit of a copy of trying in 1.0, but slightly different. So it's repeating the US, and then it's another go at global shale compared to the activity in the 2010s. And just to orient people with an example, the 2010s, folks on the line might remember all the big efforts in shale gas in Europe. Poland was quite high profile, shale gas in the UK. So that's kind of what we're talking about in 1.0.
Right, got it. So Rob, what would you say your key takeaways then? What are the messages that you'd really like people to take from the report?
Yeah, so hopefully we had more than one message in the report, Ed. I think we did. But one that has driven a considerable amount of interest and debate and opportunity to dig deeper and exchange ideas. Josh and I have been road showing this with Wood Mac customers for a number of weeks since publishing, is this idea of the Permian kind of coming into its own, right? Just as the really large hurdles in 1.0 were starting to be realized, right? So things are getting tougher in shale gas in Europe and Asia Pacific, right? For greenfield explorers like Chevron, ExxonMobil, ConocoPhillips, Shell was quite big, right? So things were starting to get tough there after 3 or 4 years, slow progress. Some wells weren't great. All the while, in the U.S., the Permian was really hitting its stride. And global upstream, folks are always looking for, the best opportunity, the lowest cost, the most scalable, risk adjusted, et cetera. So the Permian was becoming the best thing in global upstream, just as these plays were hitting headwinds. And one of the points that we made, if I could use a bit of outspoken language maybe in the conversation, the Permian in some ways is killed too strong of a language, but it's sort of the Permian killed 1.0, like it really shut down progress, right? So if we play that forward, right, there's a return to progress in shale exploration in 2.0. Is there another mechanism in the U.S. that's going to be bigger, lower cost, and sort of steal the oxygen out of the room, right? And I don't think this will surprise many people on the call in the discussion, but if there's not another obvious Permian, what level of headwind or resistance, if I'm saying that right, could Global Shale 2.0 face? Is there another mechanism that people are just going to say, yes, this is a bit costly, yes, this is moving slow, but I'm going to stop because of this instead, right? And I think what we're proposing is there isn't a because of this instead that's obvious on the horizon.
Right, got it. So in particular, you mean there's not another Permian out there in the US at least, or in North America at least? There's not going to be that new frontier opening up, which, as you say, is going to suck all that capital and talent and resourcing away from efforts to develop shale around the world.
That's a great way to put it. And yes, that is the current view now. The Permian is one to itself.
Right. So I want to come back, Josh, to the issue you raised about timing in terms of sort of why now for this report. You talked about, as you say, this is a question, an issue. There are developments here that have been going on for a while that you and Rob have been talking about for a while. Why publish the report now in particular?
So many reasons. There are so many reasons on timing of why we chose now as a time to actually write this report and put it out there. I guess, first of all, just the frequency of announcements of new countries which are exploring for unconventional resources, deals being signed between individual countries and international oil companies to explore for oil resources, changes in policy which make this more attractive. I mean, just yesterday we saw Chevron sign an MOU with Libya to explore for unconventional resources in that country. So that's a big part of it. Another thing that's changed materially in the last 5 years, at least, is just the geopolitical landscape. So conflicts in the Middle East right now, also Europe. This has pushed several countries to reconsider energy sources. And this has also resulted in renewed interest in unconventional exploration. And then finally, frankly, just the amount of interest that Rob and I are getting, and also Wood Mac in general, we've lost count of the number of clients and governments and investors that are actually reaching out with questions about this topic. Some of it's about specific countries, some of it's just more broad macro trends in this field.
Right. We're starting to get some questions coming in, so thanks a lot for that, and we will get to a couple of those in a moment. Before we do, though, there's one other thing I was keen to raise with you, because this is something I have heard people say, and I think it is probably quite an important bit of pushback you might get from some people in the industry, is to say, well, hang on, you're talking about global unconventionals. Is there not still an enormous amount of potential in global conventional resources? And actually, if you're thinking about American companies looking around the world for prospective development and so on, there's still a lot that can be done with conventionals that might be lower cost, not face the same kinds of challenges that unconventional resources have. So what do you think is kind of interesting and important about unconventionals that you're focusing on them in this report and in some of the things you're thinking about at the moment? I mean, Rob, do you want to give a view on that? What's your take?
Yeah, no, it's a really good point, and I think a little bit of very, very brief historical perspective may help answer that. So early days of U.S. shale, global shale 1.0, unconventional plays on a cost of supply metric, on a unit cost metric, they were more expensive than conventional, right? And that's why you would see the majority of countries, maybe the US is the best example, the unconventionals would be layered onto the production mix when conventional was in decline, right? Fast forward to today, all the tremendous efficiency, operational efficiency, technology progress that's happened in US shale and how the cost of supply has come down, not just break even, but again, to go to unit costs. So dollars into the system to drill a new well versus BOEs out of that well, right? The best unconventional is on parity with really good conventional. So the gap's closed.
Huh,
so
okay,
so it's not,
yeah.
So yeah. So it's not so much a question of we'll get to the shale eventually. It's if you do this right, it can be just as good on a number of metrics. And I think some of the countries we highlighted in the report, you do have that construct. So we highlight the Jafurah play in Saudi Arabia as one of the sort of 1.0 success cases, we're calling it. You and I talk about this a lot. Wood Mac's put out a lot over the past 24 hours on this with Saudi and OPEC and whatnot and spare capacity, right? So Saudi's going after shale for some tremendous reasons, but that doesn't mean there's no capacity to grow conventionals as well.
Right. Now, that's really interesting. And just as a footnote on that, it always strikes me that, we still use this language of conventional and unconventional because it's a convenient shorthand. You could say actually that, what you think of as unconventional in the sense that it needs hydraulic fracturing and horizontal drilling and so on to produce. That's actually, in the broadest sense of the word conventional nowadays, just because it's been done such a lot and, techniques are so well established and so on that,
Yeah, so on your point about why is this topic bubbling up? Why did we do the report? One point in the introduction that we just try to remind people is the U.S. upstream sector, which is largely onshore all unconventionals, right? Yeah. Has become so big now in the global mix that any subtle pivot back to resource capture, right, which is kind of a window that upstream is in now, has to include unconventionals by default. It's not smaller, and I don't want to say niche, but in Global Shale 1.0, it wasn't the scale that it is today. The U.S. is 40 million BOE a day of production.
Right. Yeah, that's amazing, isn't it? Yeah. So exactly, as I say, we use this language, I guess, because we haven't got anything better. But really, you could say unconventionals are conventional now. It's that's the unconventionals are at least, as you say, part of the mainstream. So look, we've got a question about Poland, which is known as a country you've been thinking about, saying, what is your opinion of present perspectives of shale gas and shale oil exploration in Poland? Of course, in what you've been calling Global Shale 1.0, Poland was quite an important country there, was seen as having pretty attractive prospects at one time. Perhaps, I don't know if you could fill people in on the history and maybe what has been learned from that history and then bring it forward to the present day and the way you think about that going forward.
Yeah. So, Josh, please talk about this as well. I'll invite you. And Poland is a little bit different than other countries in Europe, where there was interest and then legislation sort of stopped it. Right, fracturing bans in the UK being an example. Right, Poland is not that. Right, Poland had probably more wells drilled in it in 1.0 than any other geography within Europe. I think over 70 or so. But when you look at the cost structures of those projects and build up the costs, Poland was quite an expensive exploration project for all the companies involved together, right? I think we just share a high level number in the paper that all of that CapEx probably adds up to close to $1 billion, which is similar to what you would spend to explore kind of a big deep water conventional play, regardless of success or not. So I think one of the offerings of Poland, one of the teachings is that, this can be quite expensive, right, to appraise, and there's not a guaranteed success outcome, right? Some of the rocks in Poland weren't as great as some people had hoped on some of the well tests, right? But the glass half full case study from Poland is, a lot of regulatory support can speed things up quickly, right? And Josh talks about this a lot and has done a great job on the roadshow discussing the importance of kind of full governmental, full regulatory commitment, because there's a lot of moving pieces with this, right? You know, if you're using the US as an analog, you need to get a lot of companies in there to participate in each other's wells and share ideas. You need a few service companies to help manage costs and create a bit of competition. There's just a lot that needs to be done to provide the science to understand how these fields and reservoirs are going to behave. And that won't happen with one company drilling 2 wells every other year, which is kind of a learning from 1.0. Poland did a great job of attracting capital and being a place where companies, you know, wanted to go and explore and appraise. So I'll pause there, Josh. You've spent a lot of time on this subtopic.
Sure. I mean, less specifically on Poland, but on that whole government approach to supporting activity here, many of the barriers that we see to these projects developing, and definitely in the early stages, come down to lack of support or kind of lack of clarity in the support from the governments. And this is the fiscals is the obvious one here. So creating attractive fiscal terms, which will be of interest to international investors. But then there's a long list of secondary ones which are equally important and have equal potential for actually slowing down or completely stopping these projects getting off the ground. So these are things like regulations on water use. Many of these global projects we're looking at today are in very arid locations. Obviously, water and access is a big problem in those locations, especially if the single source of water is the only fresh water source for that entire population in that area. So what we're seeing here is countries that are willing to invest in infrastructure to bring in seawater for use in well completions or desalination plants or finding alternative brackish water sources from groundwater. That works in a big way as well. But also some of the other less glamorous things like regulations on labor participation. So the countries that have relaxed rules on early incorporation of expat labor to staff rigs and equipment with a transition over time. Those are, again, things which make these projects move more quickly. So where there's a will, there's a way. If the government will support these kinds of actions, these things are much more likely to succeed. But we are still seeing examples where that is not happening. And those are the projects which are moving at the slowest pace right now.
Right. So that is a great segue on to the next question we've got here, again, about sort of challenges faced in developing resources in a country that doesn't have unconventional industry yet. Question here asking about what you've been calling the global success stories from Global Shale 1.0, Vaca Muerta in Argentina and Jafurah, as you mentioned, in Saudi Arabia, saying, and the question is, can these models be replicated in a country like Algeria, which doesn't have the same kind of infrastructure, doesn't have the same service ecosystem? And so the question is, just get the exact writing here. The question is, could the model that has worked at Jafurah or the Vaca Muerta work in a country like Algeria?
Yes, it could, but I think that the limitation here is bringing in the equipment and the expertise to enable that. So that is something which the government and kind of the regulators and the NOC in that particular country have an interest in. But that's one of the main things which needs to happen to progress this, because Algeria has an established conventional upstream sector, so it has some of the services required for that, but still there are a long list of very specialized pieces of equipment and expertise which are not there right now.
Yeah, Algeria was one of the countries that we kind of dug into as the higher profile targets, Ed, like you said. Definitely not starting flat-footed with unconventionals, has had tight gas for a long time. Geologically, the hot shale is very high TOC. The science indicates that there's a massive gas resource, right? We haven't talked about markets much, but the prize for that amount of gas would be piped exports to Europe, right, through Spain and Italy. But there's a timing element as well, which makes Algeria quite complex to study. And the timing element is European gas demand, right? Potential resumption of Russian flows, what's going on with global LNG, everything that I'm sure you've been talking about on the energy gang for a couple of months now, Ed, right? And then a few years ago, the Repower EU initiative was very much, in the lexicon. And what's the timeline of that? So these projects will not move anywhere near the pace that they have in North America, the US and Canada, right? And even some of the success cases, it's easy maybe to look at the production profile of the Vaca Muerta and go, wow, this is tremendous. Look how fast things are moving. But there's a lot of history that isn't in those charts from early work that Repsol did going back a couple of decades, right? So it's this mix of factors of some of the market opportunities look tremendous. Some of the subsurface looks tremendous, but there's still these operational issues. There's still fiscal terms that need to be worked out. I apologize, I'm repeating some of the things Josh has said.
Yeah.
But there definitely are some geographies that are very high profile. There's much more industry focus on them. The right companies are interested and starting to show real commitment. But that doesn't mean it's going to be easy. That doesn't mean it's going to be quick. We can't just point at a map and say that will be as big as the Vaca Muerta in 5 years. That's not realistic.
Yeah, no, sure. A couple of other questions about specific countries that have come in. One about Ukraine. I've heard rumors about shale exploration in Ukraine. Is it a viable option? What's the answer on that? Do we know? I mean, obviously, presumably there's a lot of issues around the security situation there. Yeah.
Yeah, wasn't particularly expecting that question, to be honest. There was some work done in 1.0. I believe Shell was drilling some tight gas prospects. But it honestly hasn't been very high on our radar for signals of industry re-engaging that from a 2.0 is going to pick up what was done in 1.0. I don't know, Josh, have you?
Yeah, I mean, the Ukraine story is an interesting one. As I understand it, there are two main unconventional plays there. One is in the Donbass region, which obviously right now is going to draw a little traction. But then also there's another one in the far west of the country, which has slightly less of a security concern, but it's very unlikely that these things will be developed until some resolution to the conflict in the country occurs in some point in the future.
We had a map in the piece, and we spent a lot of time talking about that map in meetings on this roadshow, where the map kind of shows these are some countries in Europe that were studied, analyzed, wells were drilled, etc. in 1.0, right? And they were all sort of gas plays for obvious reasons, right? That stuff hasn't been picked up in 2.0, but visualize a concentric circle going around it, right? And countries a little bit further out are on the 2.0 list with the same maybe end goal European gas demand, just not in Europe proper, maybe, if I'm saying that right, Josh.
Yeah, so I mean, Algeria we've talked about, but also Libya, Turkey, Azerbaijan. These are all countries that are reasonably well connected to the European market and have potential for unconventional resources, specifically gas.
Yeah, and as Rob was saying, they'll also face some of those same questions about European policy and what the market's going to be and how much support there's going to be long term. Indeed, yeah. And then another country to throw at you, which is China. Someone asking a question about China, which of course has had some success, haven't they, in unconventionals? And I don't know how you read, what they've been able to achieve and what their prospects are there.
Yeah, so they've gone through the, maybe could I call it staircase of unconventionals, right? Coal bed methane, tight gas, shale gas, right? Coal bed methane predates the other two. I believe that's still growing, reasonably successful. I'm not 100% sure off the tip of my tongue, Ed, if that ever met the volume goals of prior 5-year plans, but definitely production success in coal bed methane. tight gas in the Ordos Basin in particular has performed extremely well, right? But China shale in the Sichuan Basin, I might offer, hasn't met the potential that folks had hoped for a decade or so ago, right? You had a number of majors in there. Conoco was involved as well. There was a lot of discussion historically. Was the prize actually the shale gas, or was it a larger energy ecosystem, downstream relationships, lots of moving pieces with that, right? We have had a couple questions and discussions around this, but we specifically didn't include China in the paper as a high profile target. I guess we're just not there as analysts, to see some of the companies re-engaging now, choosing to try and go to China again. And these are all largely US companies.
Yeah, because I think I'm right in saying the geology is quite challenging, isn't it? It's quite different from US shale. And there's, just for instance, in what is possible with horizontal drilling, there's fewer of the sort of the long flat strata that.
Yeah, so we're kind of throwing geology all into one bucket. We might segment it a bit and say that the structural elements of those basins are quite different, even if the mineralogical elements might not be as different.
Right. Gotcha. There you go. See, that you're going well beyond my ability to handle geological concepts there, but I think I see what you're saying there. That is interesting. Got another question.
Lots of folding and faulting, we'll say.
Yes. Yeah. No. I mean that's exactly what I'd heard as well, and yeah, that very much kind of chimes with what I know about. I know just obviously intuitively. Then, if you're trying to produce from horizontal wells, geology that has lots of folding and faulting in it is going to be more difficult because, as I say, you don't.
It's the surface as well. It's the surface as well. The Permian is fantastic that it's big and vast and flat, and well padded.
Oh yeah, sure. Yeah. Good point.
The Sichuan Basin is absolutely not that.
Right. Yeah. Indeed. So then pivoting, then kind of moving around the world. Another country, there's a lot of interest in particular this week is the UAE. Now, you in the report identify sort of 6 most attractive prospects for global unconventional development. One of those is in the UAE. UAE, of course, hitting the headlines because of the decision to leave OPEC. Is that going to affect unconventional development there, do you think? Is that a sort of a consideration? And if so, how might it affect what happens there?
I'll ask Josh to talk about this a little bit, and I'll just tee him up with, you probably need to talk about oil and gas a bit differently in their target plays and fields.
Right. Okay.
Yeah. So, the UAE is fortunate to have 2 different plays, which made our high ranking. This is the Ruwais Diab play in kind of west of the country. This is a gas play. This is the one which is the most mature, and we expect to see this progressing quite significantly this year. It's already had several hundred wells drilled. But then they also have a liquids play in the far south, but that one's actually quite far behind in terms of its development. This is the one that EOG Resources is involved in, as well as Petronas. But because the primary play that they have in this country, which has the highest potential for near-term development, is a gas play, this OPEC exit is not going to have a huge influence on the future trajectory of that. But Rob can talk a little bit more to the kind of future supply from the country and the implications of that.
I would maybe so I was reading the Wood Mac Edge note on UAE and potential implications to oil price. I might just encourage people to read that, Ed. we're only a day after the announcement, right? I think the important point that Josh made is most of the progress in UAE is on the gas side so far. I think we'll leave it at that.
Right. Got it. So maybe just to move away from looking at individual countries and to look at the companies that might be most interested in international unconventional development. When you look at this, is this particularly a phenomenon of US companies, the majors and the large independents, looking for more international assets, international development, or are there other things going on? Are European companies involved, other independents? Who are you mostly looking at here?
Yeah, so you do have a distribution for sure, just as there was a very important distribution in 1.0, right? NOCs, super majors, U.S. independents, small cap, micro cap companies, taking a lot of risk in the portfolio, but with tremendous upside. 2.0 has its versions of, the quadrillas and the three legs. I remember an interview you did with three legs, years ago, Ed. So it's the distribution, right? It's the distribution, which is good, right? The U.S. independents are probably the peer group that folks orient themselves around, particularly because of a couple of moves that were in industry press. The companies may have actually press released some of these last year. So these are moves by Continental and EOG, and Josh mentioned some of the specific companies. Folks are always interested in what EOG is doing in new frontiers, right? But an important observation, we think it's important that we raise in the paper and invite people to remember is, those two U.S. E&Ps are really good explorers, right? They've broken open countless plays together. They're very good, right, at new play identification and entry. Where I'm hoping to get with this is, just because those two companies have done it, don't expect the entire U.S. independent peer group to go and do the same, right?
Okay. Yeah.
But where one company acts, another will look, right? And post the massive consolidation waves that we've seen within the U.S. independent peer group, some companies now are so big by production reserves, capex metrics, that they start to comp in a different peer group, right? And one of the things that we've noticed and written about is some of the U.S. independents are so large now that they actually look a little bit different by not having international assets in the portfolio, right? And at the same time, we talked about cost of supply a few minutes ago. Shale is, just as good as the best conventionals with the right cost structures. So bigger companies think about portfolios differently. Tremendous progress in shale. This really differentiated skill set. Like, all the elements are there for them to re-engage. And I think some of them will. So I'm trying not to be on both sides of the fence to say, Continental and EOG are a bit unique. Don't expect that from everybody. But at the same time, the other grouping of everyone else is in a great position to try this as well.
Right. And to your point, also, as we're discussing this earlier about, there's no new Permian out there, there's certainly no new Permian out there in North America. If you are a US major or an independent, particularly perhaps the larger independents, and you're thinking about wanting medium to long-term growth, where do you look? That's going to be increasingly hard to find, presumably, in North America, certainly in the United States. I mean, if we think about production heading to a plateau in the 2030s, maybe a bit earlier for oil than for gas, probably more growth in gas longer term, but still production starting to level out. So just as a matter of arithmetic then, if all the companies in that industry want to grow, they're going to have to at least think about doing that beyond the United States, right?
I think that's a very important point where we'll have to wait a little bit to get maybe some clearer signals from the companies. Like, it's fine for the three of us to talk about, these companies need to grow. But if you look at where they've been for the past few years, they haven't really stretched for growth. Yeah. Right. They're looking to demonstrate improved capital efficiency. When the U.S. independents, when and if they start to talk about, hey, we're going to grow 10% over the next couple of years, then I think this idea gets a bit more momentum with it.
Right. Good point. But as you say, I guess, again, in sort of investment terms, the whole theme of the past 5 years or so has been much less of a focus on growth and more of a focus on, as you say, efficiency, capital efficiency, disciplined capital allocation, returns to shareholders, share buybacks, dividends, and so on. Yeah, no, that's a very interesting point. So I've got a couple of questions also about sort of the country's perspective and thinking in kind of general terms about if you are a country that wants to accelerate development of unconventional resources within your borders, what are the key things you need to do? And Josh, I mean, you were touching on some of this earlier in terms of some of the issues around regulation, fiscal terms, and so on. But just in terms of prioritizing, and I suppose I'm interested in the lessons that can be learned from the success stories of Global Shale 1.0. That, I mean, I can remember when people first started trying to develop the Vaca Muerta. At that time, people said, "Oh, it'll never work. It's so challenging. There's all these problems with regulation and with water and with infrastructure and everything else, the service industry." And it did at the end happen. It was ultimately a success, but it did take a while to get there. And as I say, interested then in the lessons from that and what can companies learn in terms of if they wanted to accelerate the development of their own resources, what should they do?
Yes, I think there are a few ways to tackle that. And, we've talked already about this thesis of the whole government approach of going all in on supporting this kind of activity. And that permeates into policy around water use, labor regulations, import regulations on equipment. But the places where we've seen this accelerate the most quickly, it's been in places where there have been formal licensing of exploration acreage to specific companies. So the UAE in particular, Australia to a certain extent, these kind of things have given timelines which are kind of required for companies to go in there and drill wells. So that's one thing, which is a positive thing here. The other piece, which is probably equally critical, is getting access to these rigs and completion units. Different countries have tackled that in different ways, some with more success than others. But again, to call out the UAE, they ADNOC created a subsidiary called Turnwell Industries, which actually acquired equity in several providers of these services to ensure that they can bring them into the country, so that they were there, they were ready to be used to drill these kinds of wells. Some other examples have not made as much progress there, but again, it's just because there hasn't been this holistic kind of approach to getting those barriers out of the way and ensuring that those pieces of equipment and those skill sets can be imported.
Right, got it.
One thing I might add to Josh's really good answer and sprinkle in, Ed, is a phrase we've used for a long time, since 1.0, is what is the cost of science? What is the cost of getting information, right? In the U.S., that cost is very low, right? Because of 100 years of conventional activity and log libraries and individual wells might have 10 different participants, and there's lots of information flow with knowledge sharing, right? Internationally, with not as many participants, not as much transparency, right? That will slow down the pace of appraisal dramatically. You talked about the Vaca Muerta. There are close to 20 companies, plus or minus, in the Vaca Muerta. Well data is available via the government. We have all of it. We model all of it. So there's just an added level of transparency, and the additional companies create a bit of asset liquidity, and the M&A market is starting to develop in the Vaca Muerta if you track transactions over time, right? So that provides lots of incentive for companies to try things different, right? If they're on a monetization pathway, bring in their own ideas. It just creates this sort of mini version of the U.S. shale ecosystem. So I think to your direct question about what's a critical factor, you need and I hope this isn't saying the obvious, but you need a critical mass of companies moving quickly and letting information change hands. And that was very few and far between in 1.0. Cracking that nut, super important.
Right. Yeah, no, I think that's a really important, interesting point. I mean, I think someone earlier used the word ecosystem, that, as you say, having that ecosystem. And actually, this is something that you can see in plenty of other industries as well. If you look at Silicon Valley or, Hollywood, or examples, all sorts of other sectors, biotech in Boston or whatever, as you say, having critical mass, a number of different companies working together, competing against each other, but also cooperating at times. That's the way you get success, not just, as you say, one or two companies drilling one or two wells. That makes for very slow progress.
This is where the regulatory and the fiscal comes in. I mean, one topic that we've been talking about with our fiscal team, just sort of hypothetically, is, what if there was sort of a sliding royalty in some of these fiscal systems, where it started low, but then at various production thresholds, it tiered up, right? So it's very low royalty at first, play gets a little bigger, introduce a bit more. But, there are things that we can kind of map out in models that make this a lot more interesting economically.
Yeah, there's some things you can do. So we should wrap up in just a moment, because Rob, I know you have to get off. You're going to meetings, talking to people about exactly this subject. But just before we go, one final question. Again, someone asked a question going back to the title, hydrocarbon copy, which I think the point is, to what extent are we now really just trying to copy what was done before, or in Global Shale 2.0? Global Shale 1.0 rather, to what extent there is something now very different in 2.0 that means the industry is better equipped to take on the challenges that are faced back in 1.0.
Josh,
go on. Who wants to have a
I'll take part of that. I mean, the one big lesson that we've learned from 1.0 is a clear, quick understanding of which countries to avoid. So if there are barriers or lack of societal support, that is a showstopper, and we should move on to look at other locations. So that's a big one. The other one is, in 1.0, there were several countries that were looked at which were pure frontier greenfield locations. They had no conventional history. They had no infrastructure at all. And I'm not speaking specifically to unconventional developments here, just nothing. And again, these things are not really likely to progress if that infrastructure is not in place. And again, those countries are not being assessed again in this second round. The search now is much more focused, and it considers a much better combination of the above ground and below ground risks.
Got it. Rob, final word from you?
Yeah, I'm quite excited about the next phase of analog modeling, right? US Shale was very technical during 1.0, but it's almost unrecognizable, the amount of tech in 2.0, right? So rather than looking at early wells in Poland, and doing as much work as you can on analogs and saying, hey, we think Poland looks like US play XYZ. The first few wells will have clusters and stages designed this way. We think this is the right pump rate with this size proppant, and that's going to determine if this works or not. I think the level of specificity in analog modeling now could be this well and pad that we're about to drill actually looks like this individual pad in this US basin, right? So it's much more specific, much more tailored, higher probability of technical success. Technical success has to come before commercial success. I'm not sure if I explained that right. I can maybe wrap it up and just say folks are going to be a lot smarter with wells that they do drill in 2.0 with a better set of expectations.
Yeah, no, I think that's very clear. I think it's absolutely fascinating. So a very interesting point, and certainly it's going to be great to keep on talking to you over the years to come to see how these projects develop and who actually does manage to make a success of it. Unfortunately, for now, though, we do have to leave it there. Thank you very much, all of you, for joining us. Big thanks also to Josh and to Rob. As they've been a fascinating discussion and a really important topic, as I say, particularly at the moment. Many apologies if you submitted a question and we didn't answer it. If you're a Wood Mackenzie client, we will definitely follow up with you and make sure we get you an answer. And also, if you want to follow up on any of the issues that we've raised here, if you think we could help your company, if you think you're interested in learning more about international unconventionals prospects, please do get in touch. You can look on our website, woodmac.com, or you can send us an email. A good email for this is events@woodmac.com, and we'll follow up there and get back in touch with you, and we can take discussions from there. And as I was saying earlier, all of our Horizons reports, including this one, you can find on our website at woodmac.com/horizons. We'll be doing this again in another month with our next Horizons report, so please do look out for that. Look out for it on LinkedIn and elsewhere. We'll be telling you about that. For now, though, that's it from us. Thank you again very much for joining us, and we will see you next time. Goodbye.
Thanks, Ed. Stay well, everybody. Bye-bye.